Welcome to episode 71 of Accessible Finance. I'm Eric Johns.
And I'm Rachel John.
Let's dive in.
All right. So today we're diving into an issue that's more common than you might think. You probably actually
Agree.
are not surprised.
I very much agree with this take.
And it's the focus on how to rebuild trust in financial advisors after having a bad experience. Specifically answering this listener's question. I don't trust financial advisors because of bad past experiences. What questions should I ask to make sure I'm finding the right one now? So this is a tough one because I think a lot of people can feel burned by bad advice, high fees, or even unethical behavior. So where would they start if they have found a way to be willing to give it another shot?
Look, this is a fantastic topic, right? Like it's super important. And the financial advisor-client relationship is built on trust.
Mm-hmm.
A bad experience can shatter that. You're hesitant or reticent to do it ever again. And boy, I absolutely get it. Look, I hear you. I don't have a particularly rosy view of the industry, as I've said many times. It's one of the reasons I'm here. Absolutely understand. The first step is to realize that not all financial advisors are created equal. There's no requirement to be able to hold yourself out as a financial advisor. You don't need anything. You don't need a college degree. You can just say it, right? Like I could have no certifications and just say, I am Eric Johns, financial advisor. Come work with me.
It's easier to do than to change your name or anything
It's
like
nuts.
that.
I was shocked to learn that fact, right?
Yeah.
But there's different types of advisors with different certifications, pay structures, and approaches, right? Like to planning.
Yeah.
Some will just not do the planning component. They're just saying that they're asset managers or wealth managers. And it's not super clear as to what you're going to get. We even had that issue when we're talking with prospects. They're like, what exactly are you going to do? And we're like, well, we can show you some examples of what we've done for other clients.
I think it's hard to convey precisely what you do when you're dealing with such a multifaceted amount of information.
Variables
right?
and inputs, right? Yeah.
And then you also, if you're properly protecting your client data, can't really say like, this is what I did for this client.
Correct.
So there's a lot of things there. And I think that the advisor-client relationship is a really intimate one because you see, if you're working really effectively, you see a lot. You know a lot. And so trying to make sure you're finding one that makes you feel comfortable and is a good fit is so important.
Correct.
So what I loved about this question and the reason that we picked this one is that, we've come across a lot of like, how can I find the right advisor? How can I do whatever? I love that this question focused on what questions should I be asking to find that.
Help to narrow it down.
So let's
it's gonna
look at that.
Yeah. It's going to be difficult for you guys too. Like it's going to be difficult for the general public in the same way that it's difficult for us to convey value to prospects, because it's going to sound like we're trying deliberately to talk over their heads. Like they're just words that you're just not going to have heard in your everyday life.
Well, and
even when we answer this question, right?
Well, I think that is a really, really important thing because the industry is so focused on
acronyms.
Yes. There's a lot of words that are not used in day-to-day conversations or speech, but it's very important because these words convey very specific meanings.
Yeah.
And so you have things that sound very similar and are almost intentionally misleading.
Yeah.
So it's very important that you are incredibly precise in the questions that you're asking, but also that you are correctly documenting the answers you're getting. Because you'll hear the words like fee a lot, but fee blank could be very, very different. Yeah. So let's focus on that. What would the first question be that you would recommend somebody ask?
How they're compensated. So you straight up ask, how do you get paid? Right. And then watch them squirm and give you a bunch of buzzwords. And it's still, the problem is you're going to leave that question. Even if I'm a commission only advisor, they're probably going to dodge, and usually like they're salespeople at heart.
Masking that,
right? Yeah, they're not going to say like, "Oh, I get paid on commissions. I get like 2% of all the things that you buy forever." Like they're not going to say that. It's really unlikely that they'll say that. Luckily, I haven't encountered all that many, so I won't know exactly what they will say. But I can tell you that like there's 3 ways that advisors are going to get paid. Right? Fee only. Okay, which means you charge either a flat, and then there's variance within each of these. But let's talk about the 3, and then I'll talk about the variance.
We did do an episode, I think.
Yeah, we tried to break it down.
Where we talked about what the different type of fee-only structures are. I think because we're talking about a variety of questions, and this is one of the questions, we're going to talk a bit big picture here,
Yep.
but we're going to focus on essentially like the 3 buckets or the 3 ways
Yeah.
that
So
the fee structure is classified.
So there's fee only, which means that they're going to be compensated based on what advice they're giving you and the selections that they're making, rather than contrast that with commission based, where they're going to get paid based on the products that they sell you, right? Like if I'm selling you variable life insurance or like universal life insurance or whole life insurance, I'm usually going to get paid like a percentage of the amount of that you buy. Does that make sense? So I'm going to get a percentage of your first year's premiums, and then I'll get a trailing percentage thereafter.
So I would be
So I'm
incentivized
incentivized to just
sell
pitch
you the
you.
biggest
Yeah,
policy
exactly.
I
I'm
can.
going to pitch you like the
Yeah.
largest. Well, I mean, like I probably wouldn't, because I would never sell whole life insurance for this reason exactly, because I just don't like that misalignment, right? Like I don't like the perverse incentive structures where, as an advisor, you're incentivized to sell clients things they might not need, right? I don't
It's
want
hard
that
because there are certain situations where someone absolutely
might
could
need it.
qualify for that, and
100%.
exactly. But it's not even just selling the
It's rare, by the
wrong
way.
item. Yeah, but it's not even just selling the wrong product to them. It's selling it in the wrong quantity, right, or the wrong amount as well.
Correct. It's also that these advisors, or the commission based advisors, are going to be less focused on the planning components, right? So they're going to be less likely to be interested in tax stuff. They're going to be less likely to be interested in your estate planning, that kind of thing.
Well, because
They're
once
just
you
trying to sell
signed
you
on
the
the
thing.
dotted line,
Yeah,
and
they're
you've got the
interested in
policy,
selling you
they've
the
got
product
it.
because their compensation is directly tied to the products that you're buying.
Okay, so fee only and commission based sound very antithetical to one another. They're
Correct.
opposites, right? And then
Correct.
there's something kind of in the middle, right?
There's something called fee based, right? Which essentially means it's a combination. You can charge like a fee for planning, but then you can also earn commission on products. So pretty much everybody that's going to be commission based, for everyone that commissions are going to be a component of how they're paid, they're going to call themselves fee based. Okay.
It sounds very close to fee only.
Fee only, correct. So there's confusion there, and people don't really understand the difference.
I've removed the word commission that everyone knows is kind of
Exactly.
a little bit
Commission,
taboo
people
and
have
naughty.
realized is not where they want to be.
Yeah.
So they've gone to fee based. But then even in the like fee only like bucket, right? There's still a variety of ways that the advisors could be paid. They could have a flat fee, could have an hourly fee. They could still do percentage of assets under management. They're just saying that they don't earn commissions, or their compensation is not going to vary based on what they place the client in. Does that make sense? So like it doesn't matter if they put you in term life versus whole life versus universal life versus equities.
So
or
the way that they're
bonds.
getting paid is not affecting the advice that they're
right. So
providing to you.
hopefully there's no impact. There's no perverse incentive structure there, right? They're getting their fee regardless of what products they advocate. And so I would say that's probably good.
Yeah, it sounds like the fee only advisor would be the safest choice, since they're not incentivized to sell you anything. Okay, so this makes sense completely.
Okay.
So knowing how they're paid will help you figure out if they're working in your best interest. What do you think would be like the next question that you should ask?
So this is a hard one, right? So I would ask, are you a fiduciary? Okay. And then there are so many ways they can get around this, right? Are you a fiduciary, and would you be willing to sign a fiduciary oath? Which is essentially saying, like, I will act as a fiduciary at all times and in all of our interactions. Because there are so many ways. Even in the CFP coursework, you have to act as a fiduciary when giving financial advice. But then if you're talking generally, then you don't. Like it's weird, and there can be. We don't want to have to litigate whether or not they're acting as a fiduciary. Just straight up, I'm always acting as a fiduciary. Can you tell me that? Look me straight in the eyes and tell me, and sign that you're always acting as a fiduciary, always acting in my best interest. See what they say.
And I honestly, that's a great question, I think, to ask if you are looking for someone who makes you feel comfortable and is a good fit. I feel like you can get a lot from somebody's reaction to that question.
Yeah.
If they are relieved and excited, or if there is a positive reaction to you asking that question, they're more likely to be a fiduciary than not. By no means does this mean they for sure are, but someone who is a fiduciary is going to, I think, be relieved that you're aware of what the term is, that you know to ask for that.
And that's the kind of relationship you want, because that's the kind of relationship we're going to want, right? Like that's the kind of relationship they are going to want if they're, reasonable people.
Correct. Beautiful. So if someone isn't a fiduciary, that should be a huge red flag.
I agree.
Okay. What else should people ask to make sure that their advisor is a good fit for them?
I like asking about qualifications and certifications, not because, there's any kind of wisdom that's bestowed immediately when you get it, right? Like you don't ascend immediately. Like you had to do this, you had to do the coursework, you had to pass the test, you had to show some minimum level of aptitude to get various certifications. Not all the certifications are created equal.
For sure.
And boy, are there a lot of letters. Most, like you're not going to understand half of the letters. Okay. There are a few big ones that I think are important. If we want to talk about that real quick, I think CFP is kind of the gold standard, Certified Financial Planner.
Yes.
That is going to be the gold standard
rigorous.
because you had to do a ton of coursework, you had to pass a test, and then you have to do continuing education requirements.
Yeah.
And typically the people that are in that are going to have continuing education that around like my idol, Michael Kitces. But they're going to have they're going to have to stay abreast on the things that are happening in the industry.
And I think you're missing also one of the important key components was it's a certain number of hours.
Ooh, 3 years, yeah.
Yeah. I mean, we're not talking like I passed a test, I'm great. It's I also have done this job for 3 years.
Correct.
So I know, this is slightly off topic, but like if I go to get my hair cut, I want to go to somebody who is professional and not someone who's in school learning how to do that, right? So in order to have the CFP designation, like they might say CFP candidate because they're meeting the requirements or they've passed the test. But if they have the designation, and correct me if I'm wrong, they've also then put in the time and have the experience.
Exactly. They've had the hours. They've had about 3 years of full-time employment is what it's supposed to be. So it's a lot.
Not a light ask.
So they've had the experience, they've had the education, they have the ethics that they've signed to. So, there's a lot. So that's pretty good. I think that's probably the baseline. That's probably the baseline hurdle for me. I really like CPA or EA, which means, hey, like certified public accountant, right? Or enrolled agent, which is an IRS designation that focuses strictly on the tax component, right? The tax side of the CPA, and can get really granular there about the tax rules, tax law. So those letters typically mean they'll be engaged in tax planning. They at least know the things, right? So they'll probably be more likely to provide you with tax planning and maybe tax advice. We've talked about this in the past. If they work for a bigger firm, their compliance department's unlikely to let them provide tax advice. If they're in a smaller firm, they're more likely to do so. Anyway, so we have CFP, CPA or EA. CFA, Chartered Financial Analyst, means they've gone really granular into the mathematical calculations of portfolio analysis. Do you need that? No, not really. Those are usually the people that are going to be managing funds. Like if you hear like VTI, or VOO, or you're familiar with SPY, any of the funds where, ETFs, the people running those are typically going to have CFAs because you're looking at really, really granular alpha, beta, theta analysis, portfolio construction, that kind of thing. And then I'm trying to blank. Wasn't there 4?
So you have the
CPA, CFA, CFP.
Yep. There is another.
I thought so.
It's going to come to me randomly, and I'm going to end up
that's okay.
telling you that.
Yeah, that's fine.
In my brain.
No big deal. But
and I will say they're coming out with new designations.
Oh yeah, there's going to be like certified. What is the new one that they just released from the American College is like certified tax planning professional or something like that. It's not that because it's not double P, but it's anyway. It involves like the fact that you've taken another course that focuses on tax planning exclusively, right? So that's another one just for, it shows that the advisor at least is super focused on tax planning. TPCP, yeah, I'm a fan of it.
Tax planning certified professional. And there's a lot out there as well. And depending upon what you want, you may want somebody who's willing to offer like financial, counseling.
Sure.
If that's something that you need.
That's true.
So when you're looking, everyone who you're looking at should have their letters behind their name.
Right.
A brief Google search can tell you what they are. But I would dive deep enough to look at what the requirements are for the certifications, because there are some that it's go study for a few hours, take a test. Yeah, you have a designation.
Absolutely. They're not all created equal.
At all.
I look for CFP just because it says, hey, look, I take my profession seriously. I'm committed to doing it well and doing it right, and at least being abreast on all the conventional wisdom around financial planning. Right. Like I don't know people that take themselves seriously and that I would consider to be respectable professionals that don't have it and are providing financial planning.
Yeah.
So that I would go with that just as the minimum hurdle. And then the others are kind of like, where do you want to focus in? So you can ask them that. You can ask them, what is your area of expertise? Right. Some are working mostly with retirees and they're really big on just, creating income for retirees. Like some are really interested in taxes, tax strategies, various tax strategies. So we would happen to be kind of both of those. Right. But But you want to kind of know what they're doing. Some
Yeah.
are like much more on the investment side, like they're super granularly focused on investments. They like to pick their own stocks.
Yeah.
And you know, we would, it doesn't matter, but
Well,
not-
I think that if you're looking for somebody, chances are you have in your mind what your needs are or what
Mhm.
areas you want focused on.
Sure.
So finding somebody, you might find someone highly qualified that you really like a lot, but whose interest and area of focus doesn't necessarily address what your needs are.
Right.
That's okay.
Sure.
So finding someone whose area of expertise matches what you believe that you need.
Correct.
Really
And then,
helpful.
boy, I like this one a lot. What is your investment philosophy? So ask
Yeah.
them what their investment philosophy is and make sure it aligns with yours, right? Because there are some clients or there's some prospects that could come to us and we're just not a fit based on the way our investment philosophy.
Right.
They might be saying, hey, look, I really like crypto.
Yeah.
I'm super high on
We're
Bitcoin,
gonna go there.
right? I'm super high on
Correct.
Bitcoin. I hate fixed income.
Yeah.
I don't even like equities, no international equities, right? I only like the US and I want to pick them. And then I want to pick my US stocks and I want to do Bitcoin. And we would have to say to them, unfortunately, we're not a good fit, right?
Well, and I think it's important to touch on the fact that the reason that we would say we're not a good fit is it speaks to the role of a fiduciary. If we
Correct.
believe that allowing a client to engage in certain investment strategies is not in their best interest, and we allow them to do so or guide them down that path that enables that, and we believe that that is far too risky for them or it will
Mhm.
not, produce positive results, we're not putting a good faith effort forward
Correct.
in being a fiduciary to them.
Absolutely agree.
So it is really important. And I think that, you can apply that, like, what's your investment philosophy? You can
Right.
apply that to some of the other areas that you're talking about as well. But I think that, like, what's optimal in tax land is pretty agreed upon
Cut
and
and dry.
universal.
Absolutely.
Whereas what is optimal in investment philosophies is very, very,
Academia seems to agree, but not everyone likes that.
that's true.
Not everyone likes that, right? So semi-strong, efficient market hypothesis would indicate that low-cost, globally diversified ETFs are the play. We agree with that.
That's our investment
academia
philosophy.
with maybe a marginal
anyone to know.
overweight to small caps, things like that. Anyway,
Yes.
you can look at Nobel laureates and research, and you can find papers to support
Mhm.
that. But the point is, if someone's really like, hey, actively manage my things, I need you to be picking winners always. Well,
Yeah.
like that's simply not what we do. We don't think that that's reasonable to do over time. We think that there's significant, insurmountable evidence to the contrary.
Yeah.
So we're not comfortable pursuing that strategy.
And I also think it speaks to the amount of time as well. The amount of time you have to dedicate to watching the market fluctuations minute to minute, hour to hour, looking at the stocks detracts from the amount of time that you're spending looking at the overall portfolio as well, or the overall financial picture as well. I think it really speaks to what people's preferences are. There may be somebody who's loves it and believes that they're really fantastic at it. And if that's something that you would want to do, then you might find somebody who is really excited about picking stocks.
Yeah, so a couple other questions, right? Like, what services do you offer? Find out if they'll do anything other than just take your assets and manage them, right? So that's typically, I mean, there are
And
a
by
lot.
take your assets and manage them, you're talking about like in the investment arena.
Correct.
Yeah.
Just tell you which stocks or bonds to pick, how you should invest, what the tickers are. They're
And
going to
that
do it
may
maybe
be
for you.
what you
Some people
think
might
of
want that.
when you hear financial planner.
Right. Most people think that's all that we do.
Correct. And I think it's really important. And the CFP website actually has beautiful like images and a great way of encapsulating kind of the plethora of things that a financial professional or certified financial
It's
planner
supposed
can
to do,
really,
yes.
And so, think about things like your tax strategies, estate planning, right? Even assessing your insurance needs, like
Insurance,
anything
retirement,
that
education.
affects, anything that affects
Cash
your
flow.
financial picture.
Correct.
Beautiful.
Cash
Love
flow
that
is
question.
incredibly important, right? Some other questions. How many clients do you work with? Like we're trying to assess a couple of things. We're trying to make sure that the number's not 2.
Yeah.
Okay.
Yeah.
We're also trying to make sure that the number's not 200.
Yes.
All right. Because then, how much time are they actually spending with you?
Mhm.
And to that end, are they going to work with you directly? So you could say, are you going to work with me directly, or is it going to be one of your associates? Right. Because
That's a great
some people their job is just to bring in the clients and then they pass them off to somebody else. And that may be okay with you, but you want to know that on the front end. Maybe you really form a connection, a strong relationship, and you really trust the person that you're talking to. but they're never going to talk to you again,
Yeah.
right? Or maybe they'll talk to you only at the annual meetings. Is that enough for you, right? So you want to know that on the front end. Do you offer assistance with the implementation of the recommendations? Are they going to hand you a piece of paper or a book or
That's
a
a great
report
one.
that's going to say, do these things?
Yeah.
Or
Here you
are they
go.
going to actually do it for you?
Yeah.
Assuming you want that.
Or do it alongside you if you want to still be involved in the process, but
Sure.
don't feel comfortable doing it solo.
You're going to want to ask them about referral fees. Do they get referral fees from any COIs or centers of influence, right? So attorneys, CPAs, insurance professionals, mortgage brokers, that kind of thing. You're going to want to ask if there are any financial incentives for them to recommend certain financial products,
So
right?
that's a good workaround to the
out
commission question.
Yeah, we're trying to find out if they're going to get any other kickbacks, essentially, or commissions for recommending specific things.
Yeah.
We want to know if they get paid, if they put you in American funds, is American funds going to write them a check for some percentage of their total assets that are put in American funds, right?
And it may be that they say yes, and you're still going to work with them,
you might,
but you can at least.
But it's good to know.
Yeah, you have that lens. So when they're starting to try to offer you some of these plans, you can at least be a bit more critical of, are they offering it to me because I need it or because they want me?
Right, they're benefiting from it. Sure. Right. The other question, another is, do you offer continuous ongoing continuous ongoing advice regarding including advice on investment related financial issues? So will you help me if I need to know, should I buy this car? Should I buy this house? How should I?
Can I afford to retire?
Sure. How? Yeah, exactly. How should I pay for these things? Like, should I obtain a loan? Is it a personal loan? Is it a HELOC? How are we working with that, right? Like, which loan should I repay first?
Stuff. Yeah, there's so much.
There's infinite, right? So we want to know. We want to know exactly what they're going to do there.
Excellent.
So then, just to put a bow on it, I would say there's a couple things that we're trying to do here, right? We want to write down the questions in advance. Most professionals, this is good for you, right, are going to offer a free consultation, usually at least one meeting, where you can ask them the questions and kind of feel them out.
Yeah. I'd be a bit wary if they didn't.
Correct. Yeah. No. Don't sign anything before you've even met with the people and converse with them a little bit.
Yeah.
And then, so write down the questions in advance. Make sure that you have a free consultation, right? And then trust your gut, right? Like, if something feels off in the meeting and you just don't feel, you know what I mean? If it feels a little icky to you, it probably is. Just walk away.
Yeah.
No harm, no foul.
That is incredibly helpful. I imagine that people should also be asking for somewhere they could look at like reviews, right? Or feedback from people who've worked with them.
Absolutely. I would check online reviews more than client references. And let me tell you why. I've talked to colleagues about this. When you ask for client reference, think about this, right? If you ask us even for client references, sure, I can find people to send you to. Who are you going to talk to?
Yeah.
Right? You're going to talk to the clients that we think are our favorite clients and that like working with us.
Our biggest cheerleaders.
Yeah. You're gonna
and the thing is, it may be that all of our clients love working with us, but we're going to pick the ones that are most personable, are most likely to sit there and just brag, or the ones that we just recently did something really impactful for because they are more likely to bring up that scenario.
So you're just never going to get a great picture that way, I don't think. I think you get a better picture by just looking at the general reviews.
Yeah.
Right? If people take the time to write something positive or negative, you've made an impact on them.
Correct.
Right? And it's going to be hopefully informative.
Yes, exactly. I think you're more likely to get some of those like concerning outliers there as well.
You can also look through disciplinary history on the FINRA website and the SEC websites. CFP board even will document that stuff. So you can go look them up. You can look me up on the CFP board and find out if I have any disciplinary actions. I'll save you a search. I don't. But,
good point.
But you could find it if they did.
Right. I love that. And I think at the end of the day, it's just critical to recognize that it's your money. It's what you've worked so hard for. And you should always feel incredibly empowered to ask any questions that you need to and to make the decision that feels right for you.
I agree.
And it's funny that I'm the one saying that because I am such a people pleaser that I would, I'm the one who's apologizing to the doctor who's 2 hours late for inconveniencing them. So if you're that person, bring somebody trusted, like a husband or a child. It can be really
if you don't want to ask these hard-hitting questions, find somebody
to be. It's hard, but
Agreed.
Definitely take control of your financial situation and feel that you are well within your rights to ask the hard questions.
Biggest piece of advice, don't let one bad experience write off the industry as a whole, although I absolutely understand and it's hard to blame you if you did. But frankly, you could get a tremendous amount of help. There's an enormous degree of variance from advisor to advisor,
Yeah.
right? Like even institution to institution, advisors that are doing roughly the same job at different institutions are going to have more or less restrictions placed on them. So just variance is huge.
Yeah.
Interview a few, right?
Yes.
Talk to a few people. See
Yes.
see who you like. See
And
who
I
you fit well with.
There are some really remarkable people in the industry. We've been very fortunate to attend most recently a conference in Minnesota, and we interacted with a number of highly qualified, very competent people across the country. A lot of people are also offering virtual things, so don't feel limited by the
your
scope
geographic
of
area. I agree.
correct. If you're comfortable
people out of
working
state.
virtually, you are yes, exactly. But yeah, I think that is perfectly said, Eric. Well done.
Thanks. Appreciate it.
So to our listeners, if you have ever worked with a financial advisor, what questions did you ask? What questions do you wish you would have asked? Let us know.
All righty. Thanks, guys.
All right. Till next time.